Hey, what's going on, everyone? Welcome back to another episode here on Let It Grow Investing. I am Jeff, and thank you as always for stopping by. We've had quite a roller coaster of events in the past week, man. It's been, bomb strikes. It's been trade deals. It's been some Fed talks. We've had everything, man. It's been back and forth, up and down. And yeah, we are trying to navigate the markets. That's what we're always trying to do here. And hopefully I can give you a little bit of clarity as to what's going on, why it's doing it, and where we might have gone wrong last week. So this time last week, I came on here. I was telling you guys, hey, look, yeah, there was a airstrike on Iran nuclear sites, right? And I said, the typical trajectory after something where we're looking at what could be start of a bigger problem is going to be rising fuel prices, rising airfare. Everything that's tied to oil is normally going to spike up in cost, right? A defense is going to go up, and some other things are going to go down, tech included. I didn't really think that tech was going to get beat too hard, but there's always that possibility that the market doesn't like the uncertainty. They sell it off. And we didn't see any of that, right? We did not see a single thing of that come Monday. And yeah, it surprised me a little bit. I thought the market would be a little bit shakier. And it really, they just kind of viewed it as a non-factor. Don't care. Don't tell me about it. It's done. But we got the job done. End of story, right? That is really how it came off. I mean, I think Boeing might have gone up a little bit. Lockheed is still, a solid stock. I still like that one. I did trim a little bit of LHX, L3. I just don't really like the valuation there. So I've been trimming that one. I've been putting that money elsewhere. But yeah, none of those real, predictable moves really happened. So what went wrong? What went right? Kind of where do we go from here, right? So Trump keeps talking about peace through strength, right? So we're looking at, we're going to be strong on these things. We don't want to have all these major ongoing conflicts, but we're going to be strong where needed, right? So I think that tone kind of set a little bit of precedence of, we're not going to go to war with you, but you guys can't do what you're doing. So I think that was kind of play one. We also had U.S.-China trade deals that were being worked on throughout the week, kind of expediting the process of getting rare earth materials from China to the U.S. That's going to help automakers. That's going to help some defense. That's going to help some different specialty type, industries. So we're looking at all that. We're trying to navigate, like, what does that really mean? I'm looking at an article here on Reuters, and the part of the retaliation against new U.S. tariffs, China suspended exports of wide range of critical minerals and magnets. This was previously, right? So now we're expediting this, or going forward. China is now committed to removing non-tariff countermeasures in May talks. China's dual use restrictions on slow rare earth licensing process. Trump says there might be a separate deal with India. So a lot of different things going on, but beyond what we're looking at here. So we had a lot of S&P 500 companies hitting new all-time highs or back to some highs this week, right? So we were looking at, I think Palantir got up there. They gave it all back on Friday. We were looking at NVDA. We were looking at AMD. They were definitely back up and moving here. So I'm going to try to pull up some NVIDIA stock. We'll take a look here and see just what's going on. So I'm looking at NVIDIA. We're looking at this one sitting at 157 chart. Yeah, we are at a peak here. I don't think we got higher than that before. I think we are at a new all-time high. Amazon, yeah, Bezos got married. I know that's the talk of the town. I don't really care, but I'll say that he got married. Anyhow, so they are sitting at 223. This thing really rallied. I bought this one on Monday. As far as the charts are concerned, on a 5-day, how are we looking? I think we bought it around 2. No, maybe we didn't. Maybe it was like 211. Something like that. It was probably around here, something like that, 211, 212. Yeah, but that one has been doing pretty well. We had Palantir. That is just such a volatile stock. You never really know where this thing is going to be going. We had Palantir up near 150, I'm going to call it 147, and how we closed the week at 130. Man, that was a rough end of the week on Palantir. At least for me, it was. I know some people aren't invested into it. Maybe we can get a better entry point, but let's, I'll put that, a post-it note there. I do want to come back and talk about Palantir valuation. That is going to be very important going forward. A lot of these stocks are getting to the point where I just don't really want to buy them. This past week, I really thought, man, if it's any hotter out here, I was dealing with like 110-degree temps outside working. I'm going to sell every growth stock. I'm going to buy all the dividends, and I'm going to live off of that until it's wintertime and I get to push snow, because this 110 degrees is it's just not fun. It really isn't. So there's about 30 days a year where if you work outside, you're like, man, we got the nice day today. You guys got to be stuck inside. And other than that, I think I'd rather be inside. But when it's 110 or when it's 30, no, I'd rather be inside, or at least in the truck pushing snow or whatever. But nonetheless, I digress. I wanted to get into dividends and just live off of that rather than doing what I was doing this past week. But that's neither here nor there at this point. I'm still doing with the same thing I'm doing. I just wanted to think about that all week and just live off of dividends. That'd be so much better. At least as far as my health and safety, I suppose. Anyhow, so Palantir valuation, we're going to look at that. We were looking at, I know there's a whole list of stocks that have been just really rolling up higher. Tesla, they rolled out those robo-taxis, I believe in Austin, and a lot of hype around that. Yeah, we came down a little bit this week looking at like 323. But this one, man, I really don't know where we go here. I think Elon and Trump are trying to be friends again. I'm not too sure what's going on there. I don't really know if that has any staying power, or if it just kind of, put some kind of publicity out there where Trump and Elon aren't getting along. And, Elon can get back to Tesla, get back to everything else that he's doing, separate himself from the Trump party and kind of get back to things, right? So I don't know if that was all that was, or if there's kind of any staying power there, or really what we're worried about. Or he's just trying to save Tesla, all the protests and everything else that's going on. He's trying to kind of distance himself away from that. So, yeah, we got a lot of that, right? We've got, when we look at the QQQs, the triple Qs were back to an all-time high. We did see that this week, right? We are looking at, sorry, guys, I got this pop up in the way of my own recording. So if we're looking at this, yeah, the Qs got back up there, right? They were 549.99. If we look at the 5-year, have the triple Qs, all the NASDAQ stocks really treated us. And that's a pretty solid turnaround, right? We got, if you got in here at like 286, you almost doubled in about 3.5 years. I would definitely take that, especially on a ETF like QQQ, where you got really low expenses. You get to buy some really high quality stocks, a basket of stocks, if you will. That's probably one of the easiest ways to really explain what an ETF is, right? If I put in $100, $2 goes here, $2 goes there, $10 goes there. That is essentially what you are doing when you are buying an ETF. And when I'm looking at this portfolio, you can kind of see where the funds are going. We can also break it down and say, hey, if I buy $100 worth, $8.64 goes to Microsoft and NVIDIA, Apple, Amazon, Broadcom, Meta, Netflix, Tesla, Costco, Google, or Alphabet. The list goes on and on. But yeah, that is the top 10 that are going to be in the triple Qs. So these are all getting to the point where they are back at all-time highs, right? I'm seeing a lot of people coming back in, buying up these names, really looking into the back half of the year as to what might happen there. Now, I don't know if this rally is just going to keep on continuing. I do think we're going to get some kind of pullback. So I'm not really chasing any of these. I never say to chase any of them. If you want to, kind of dollar cost average in, you're doing what we're doing in the investing challenge. You're putting in $100 a week, you're putting in $1,000 a month, and you want to buy a little bit at a time. That is, perfectly fine. I don't know that I would bet the farm on any of these at this given point in time. I just wouldn't. I don't really ever want to trade like that or invest like that. There are some things where if they are cheaper, I do want to buy those, right? But these are not at the point where they are screaming buys. And I look at that, I'm looking at the PEG ratios, I'm looking at all the different things that we have covered before, and I'm not seeing the writing on the wall that this stock has to be purchased right at this given point in time. So one that I had been talking about, and this isn't a pat me on the back, and I'm still down on it, I can show you my numbers, I don't really care, is Nike, right? We were looking at this one, and I still think Nike being up 15% on Friday was massive, right? It was absolutely massive. And it didn't look that great. It really, if you're, see here, I'm down $38 on my 56 shares. and I've got about $4,000 sitting in Nike. It is what it is. I think that long term I'm going to be fine, right? So I was reading this article, Turnaround in Motion. Is it time to buy Nike? This is a Trefis article. Let me see if we can get this out of the way again and actually take a look here together. So the company reported better than expected fourth quarter earnings. Revenue dropped 12% to 11.1 billion, topping analyst expectations, right? So they dropped 12% in revenue. Analysts were looking for, I don't know what the actual number is, say it was 16% or 18%. So revenue's down, but better than we thought we were going to be down, right? So then we also had net income plunged 86% to 211 million from 1.5 billion a year ago, right? Down 86%, and still the stock went up 15%. And that is because it came in above a forecast, right? So we were down 86%, but they thought we were going to be down 90 or 95%. So that $211 million net income actually looked better than how bad they thought it was going to be. So is it time to buy this thing, right? We were looking at, it's a tough year in the rear view. We've got a lot of different things that are working for us. We said that digital sales were hit hard, plunging 20% as Nike worked to rebalance its DTC strategy, direct to consumer. Wholesale revenue fell 9%. Nike-owned physical stores held steady. Nike's margins took a hit as it turned to discounting and clearance to offload excess inventory. That combined with the shift back to lower margin wholesale channels pressured profitability. So a lot of different things they were trying to go. They were trying to do DTC. It really wasn't working. They were trying to get out of some different avenues to sell their products in different markets, right? And they decided, you know what, this is not working. We have to right this ship. We got to do something different. So we knew that it was going to be bad. We thought it was going to be worse, and it actually went a little bit better. So maybe they're actually starting to get some ground. They're going to gain some ground. They're going to do some things right. They're making some different changes where they needed to. And maybe we're going to start to see this thing actually get to where it needs to go, right? We want to start seeing these revenues and the earnings get back to where they were prior to all of this big shakeup. So the big question is it an opportunity or a value trap? And I kind of lean on the fact that I think it's an opportunity. Yes, it trades about 41 times projected 2026 earnings. It is a notable premium to its 3-year average of a 28x. Consensus forecasts anticipate a 1% revenue decline in 26, followed by a potential rebound with 5% growth in 27. So I did go ahead and pull this up, and this is Nike, correct? Yes. Let me go ahead and share this one instead. Let's go ahead and share this Refinitiv, Reuters. It goes by all these different names, LSEG, Stock Reports Plus, a lot of different things here, right? So when we are looking at this, we can see an 8.5%. Rear view looking as far as what the old earnings was. And now we're concerned about where we're going in the future, right? So the current is not looking great, right? We're looking at that as being a rich valuation as to where we're coming from versus where we're going. Price to sales, right? And we're sitting at a 1.5. So that is a decent entry point as far as the price to sales is concerned, right? So trailing, we're looking at a 20.8, and that would be this week's most recent close price divided by the sum of the 4 most recently reported quarterly earnings. So then forward, we are looking at not that great on earnings, right? We just saw for 2026, they think it's going to be down, but I think we are all looking to the fact that we are going to start to get back to some positivity by 2027. And I think people are trying to start buying it up, right? It's been very cheap. We don't have this 5-year forecasted growth rate, but we know it was off the charts. They were in some negatives, right? So if we're not having any growth, we're not going to be able to really do the math. So I do think that we are getting away from some different things. The fact that this is high doesn't really paint the whole picture because the earnings are all out of whack right now. So if the earnings aren't there, we're going to have some really low earnings, but we are looking past that. We're looking, 18 months out, and we're going to start to see some growth. And we're also seeing some better than expected numbers this past earnings report. Maybe we start to see that for 2026 as well, right? So maybe some of those numbers that are in 2026, they're looking flat, they're looking negative, but hey, we actually were able to pull out a 3% gain, right? So then that has some effect on it as well. So some people are already loading up. I do believe that long term, we're going to get back to a point where Nike does make sense. I was asking my older son, hey, do you want to get some Under Armour shoes? They're having the semi-annual clearance, whatever, for back to school shoes and stuff like that. He said no, he wanted Nike. I still think that is a very positive trend when the youth, and he's going to be 9, are still looking for Nike rather than going other ways. So yes, they're going to focus on that core business. I think that overall, I still really believe Nike long-term is going to be a good purchase. I think it might be rocky for the next 12 to 24 months, truthfully. But I do think that we're going to have some more of these massive updates from the standpoint of where this thing is trading, how low some of this price to sales is, the fact that the earnings is all out of whack. I think people are looking to some of this recent earnings report as signs of some good things to come going forward. So that's where I'm at on Nike. Let me know if you think I'm crazy. I might be. I don't have that much invested into this one, but I do want to go ahead and change this thing up. We're going to take a look here at Palantir. Palantir, man, is just such a difficult stock to play. It really, really is. I'm still in it. I had some covered calls written on Broadcom and Palantir that did not get assigned this week, so I still held on to my shares. I'm still going to be writing more covered calls on both of these two stocks because I can generate some capital by writing the covered calls. But I'm not really here for that. Do we want to buy this thing? Do we think that this is overvalued? I think in the short term, it's overvalued, right? I think that the amount of growth that Palantir's had since 2023 is just out of this world insane, right? It is just a massive. We've gone, up to probably 140. I don't know. I think we hit like upper 140s. Maybe we hit 150, but we came from $10.92, right? So absolutely massive gains when it comes to Palantir and just where they have gone, right? Now, if we go back to, sorry, I'm showing the wrong screen. Sorry, here we go. Palantir, 130. We came from $10. We're up to 130 and 74 cents at the moment. Now, if we do go back to this other page that I was showing you guys for absolutely no reason while I was talking about the other one, and I want to go ahead and share this one. Let me see if I can pull this one back up, screen, and we will take a look here. Is this going to be the right one? Yes, Palantir. Here we go. So we've got a very, very, very rich price to sales at 102.8. Mind you, the S&P is sitting at an average of a 3.1. That means we are paying through the nose expensive for Palantir, right? If they sold off 60% or got rid of 60% of this froth price to sales, they would still be one of the most richly valued stocks in the S&P. And now I think the second was like a 34, 35, and I forget the name of what stocks that is, but I know that Palantir is very rich, right? Trailing PE, 627. Forward PE, a 236. Their 5-year average is a 77. The S&P 500, 23.2. Forward PEG ratio, 7.4. None of these numbers look good, guys. I mean, if you're owning the stock long term, you got to think, man, I should probably take some off the table, right? No one ever went broke taking profits, right? It doesn't happen. So if you got profits and you want to lock some of them in, I don't blame you in the least. That is kind of one of the reasons I keep writing the covered calls. And my last one was at 150. And if it were at 150 on Friday, I would have sold 100 shares, right? Is what it is. And I would have been fine with that. I have had a very solid run in Palantir. I think anyone that has got in from, when you saw this thing kind of shining some light on defense and government spending, I mean, it's done really, really well for you, right? We've made a ton of money on this one, so I don't blame anyone for taking some profits at this point. I was in that camp where I'm going to keep writing these covered calls and keep basically writing my own dividend check by writing the options and do it that way. And then if it got up to that 150, okay, I'll sell it, right? That is kind of where I'm at. I'll probably still write some more 150, 155 calls a month, 2 months out, and see what kind of premium I can get on these individual shares. So that is where I'm at. Now, if we look at this one and we're looking at earnings, right, we're going to see the revenue increasing 36% by the end of this year and 74% by the end of next year. We're going to see that the revenues are going to go from 41 cents to 57 cents to 73 cents by the end of 2026. So those are going in the right direction. The earnings and revenue are going in the right direction, but we are paying so much for this stock that really a 20% swing to the downside is not unheard of, right? It could be any little blip on the radar, and this thing is just going to crater. I don't think that it's going to have a forever, drawdown on this thing. I think there is still so much volume coming in. There's so much excitement around AI and everything that they're doing with government and all the different contracts that they're writing. And we know it's a sticky business, right? They get a customer, they can't really get away from it easily. So it does have a lot of upside on the side of the contracts and the things that it's doing. But is it at a point where I want to buy this thing? I don't. I truthfully don't. And I say that it is my second largest share of my portfolio, only second to NVIDIA at this point. I am trying to find some ways to create some capital from it. I will potentially sell some of this and at least just simply play with house money, right? Take out the original investment that I have put into Palantir, let the rest of it ride. I do think it's got, a lot of runway to go. I don't think that this thing is done. I'm not saying that, but can I comfortably say that I would buy this stock right here, right now? No, I don't want to buy it. It's just, look at this. Price to sales plus 100%. Trailing PE greater than 100% premium. Forward PE greater than 100% premium. I cannot pay that type of premium for this growth that, the revenue's growing up. Yes, we're going to get about 70% of earnings, gains in the next 2 years. But even still, I don't think that the actual numbers behind the share price equate to where I want to be paying such a premium for the earnings that they are turning in, right? I think it's a great company. I'm glad I own it. I'm glad I invested in it when I did. I won't get out of it completely. I don't think that that's going to happen anytime soon. I think I've got at least a 4 or 5 year runway of this thing still making huge moves, but I don't want to be so heavy in a stock that is going to be so volatile. That is where I'm at with this thing. I don't want to see people get hurt. I don't want to get hurt, right? So that is where I'm at. Where are we looking this week, right? I think that is about where I'm at in this episode. I am looking at these stocks, man. It is really difficult to find something that really sticks out as a ultimate buy situation, right? I'm looking at them. NVIDIA had like 11% of upside. It's already at a high. Yes, it could continue going higher. I think that NVIDIA, AMD, a lot of the semiconductor names do make sense here. I just don't think that they have as much upside as I really want to go into them with. So Tesla, not as much upside either, right? That is probably in negative territory right now. I can go ahead and pull these up and actually show us what we're looking at here. We're going to pull up Tesla, share that one. We're looking at a stock price at 323. Average price target 291. I do like it for the fact that the robo taxis are coming out. I do like it from Elon kind of getting away from politics right now. I like those changes, right? I think that's probably what he needed to do. But I just simply don't want to buy it at such a premium. Amazon's been running. I don't really think that there's so much upside there. Do I really want to buy in with 8% upside when I already have a very full position? No, I don't. It's already run a lot. Google's not on the list, but I feel like Google is probably one of the more fairly valued companies. 12%. That's not hateful. It still has a little bit of downside. I'd have to take a look a little bit further into that one. Meta, man, Meta has been running. They are also looking to buy Play AI, which can replicate voices, which is still very scary to me. But I guess, if it's out there, if my voice is out there, someone could just simply replicate it, listen to a couple audio clips, and make something sound exactly like me or any other celebrity or any other one that's ever been recorded, which is pretty scary. So Meta, downside, right? CrowdStrike, man. CrowdStrike has been running, and it makes me kick myself for selling it when we did. We're sitting at $4.99, man. I remember it wasn't long ago this thing dropped to what, 240, 230, and I got out of it earlier with all of the blackouts that CrowdStrike had caused in the internet. There was a lot of different problems there. I'm not looking to buy this thing at 500 now. I'm just not looking to do it. Next era, I mean, we've been buying that one. I still like utilities here. It makes sense, right? We still need it. Everything is pushing to data centers. That's probably one of the hottest sectors of real estate right now, is everyone's looking to buy data centers, warehouses, and turn them into data centers. Everything else is kind of back burner right now. Everything is just, everyone wants data. So next era, I still really think that, all things electrical are going to be driving all these different warehouses and centers that people are building. So that is still a hot topic for growth. I still think that that is there, but I don't necessarily want to add to my utility next era energy NEE right now as well. Costco does make a little bit of sense. We got a decent amount of upside there. I do like that play. The only other one that is on our list of the stocks that we were looking to buy for this year is Eli Lilly. Now, Eli Lilly is still looking at a 29% upside here, right? We gave a little bit back over the past, 5 or 10 trading days. Let's go ahead and take a look at the chart. If I look at, let's go look at a 1 month, right? I know we got up to like 812, something like that, 819. And now we're back down to 775. So we're kind of getting this little bit of an ebb and flow, which, I mean, it's 35, 45 points, something like that. But truthfully, on a $775 stock, the actual percentage is not all that much, right? So $20 down on Friday, and it was only 2.5%. So I'm thinking I can probably get into Eli Lilly, continue building this position, and be ready for some of this upside that they are looking to build upon with all the new drugs and the pipeline that they are continuing to build. So that is really where I'm thinking of the stocks that we are looking at for this year on the investing challenge: NVIDIA, Tesla, Meta, Amazon, Eli Lilly, Next Era Energy, CrowdStrike, Costco, Bank of America, and AMD. Bitcoin's at that 13th option. I think Eli Lilly is probably the best bet for us right here, right now. So that is what I'm going to buy for the investing challenge for tomorrow on June 30th. That is where I'm going to be putting my money. We are also up on the our Webull portfolio. We're up around 25%, up $8,382. I'm looking at it right here. And man, I think that the portfolio is doing pretty well. I've got no real complaints here. I mean, some of them that we bought early on that were strictly like those pure growth plays, those have hurt us a little bit. UPS is still down. I still like that ad. The fact that you can get around a 6% dividend yield is probably not a bad thing to do right here. Build up some of those dividend incomes that I was talking about, right? That is definitely something where if you are not looking at that long term, where you want to be able to live off of dividends or basically create your own, I'll call it a pension. It's really not, but it's going to pay you in perpetuity as long as you hold the stocks, right? And as long as those stocks are still paying dividends, which is always roll of the dice. Sometimes some of them, the dividend kings, the dividend aristocrats that have been raising dividends for, 25 or 50 plus years, you've got a lot more security around those names. But yeah, UPS, let's take a look. I think it is about a 6% dividend yield, 6.5. So yeah, not too bad there, right? So I would take that as well. We've also got Walgreens. That one has been awful. Ford, well, that's been pretty rough as well. We're down 41% on that. Yeah, Black Rifle, that has not treated us too great. Down substantially on that, 77%. We are looking at some other names that have really done great things for us, right? McDonald's up 14, Eli Lilly up 4.5, PayPal's up. What in the world? Up 21%. How did that one turn around? Yeah, Chime. I haven't really talked about this one. Chime did go IPO. This thing, I did add some shares and just more or less to watch this thing. Not any real information out there, but it is kind of another fintech play. I am looking to, weigh some options here with SoFi and Chime. Maybe I balance the two out. Maybe something like that. Altria, man, Altria is paying quite a heck of a dividend as well. And we are up 32% there. Qualcomm up 17, Bank of America 8. The list goes on. Simon Property, 40% gainer. United Airlines is a 61% gainer. SoundHound up 63%, which is one of those growth stocks we're looking at. JP Morgan is closing in on a $1 trillion valuation as well. So MO is getting us about a 7% dividend, and we're up substantially on it. I did want to take a look at JPM real quick, as they are, I believe, at around 800 billion. Yeah, 97. I think they did hit 800 billion, and they traded down. I think we were up near 289, and I think that put us at 800 billion. So I do think that they're going to get to the point there they are at that $1 trillion valuation as well. Negative on the downside as well. It's getting really hard to find stocks that have that upside. So I'm still looking, right? I do think that Nike still has some room to run. Eli Lilly, I still really like that one, as I've been kind of pounding the table for me here recently. There's definitely some other names that are out there. UPS, we got any upside there? Percent, okay. And you're getting that 6.5% dividend. That makes sense to me. But that is all the time I got for you guys for today. Hopefully this U.S. men's national team wins tonight and goes on to the semifinals. We will be watching that one. And with that being said, that is all the time that I've got for you guys for today. So let's get out there, get invested, stay invested, and let it grow. Take care. I will catch you guys in the next one.